Thanks for downloading this episode of the Resilient Advisor Podcast. My name is Jay Coulter, and joining me today is Clint Sorenson. Clint and I are going to talk about turnkey asset manager providers, and we're going to go in detail specifically for advisors who are exploring the idea of creating one and for advisors who have an established one and want to enhance their offering. A little bit of background on Clint. He's a CFA charter holder. He's also a chartered market technician, co-founder of a company called WealthShield, and a managing partner at an RIA called Emerald Investment Partners. Clint, thanks for taking some time to do this podcast.
Thank you, Jay. I appreciate the opportunity.
All right, Clint, let's start really basic. What's a TAMP?
A TAMP is a turnkey asset management platform, and it's meant to be a platform where advisors can access various products, money managers, and model delivery solutions so they can give their client an institutional quality asset management program.
Okay, so why would an advisor leverage that other than institutional quality? What's the value proposition?
Yeah, the value proposition is really scale and efficiency. If you look at the average financial advisor, they're a business owner, an entrepreneur at heart. They have to wear a lot of hats. And sometimes they have to, take a step back and focus on where is my highest and best use. And a lot of times for a financial advisor, that's in financial planning and relationship management. And so, like we always say at WealthShield, it's, hey, outsource what's not essential to your value proposition. And a lot of times that ends up being investment management, but it has to be done and done well. And these platforms provide that outlet.
So in preparing for this podcast, besides not researching that TAMP stands for Turnkey Asset Management Platform as opposed to provider, I did find some research, Clint, from Cerulli that said that of CFP charter holders, about 54% are outsourcing their asset management right now. Where do you see that going in the future?
Yeah, so I think that only increases. I think what we're seeing is an awesome evolution where financial planning really is becoming the centerpiece of the relationship between the financial advisor and the end client. And I feel like the need to evolve planning to deeper levels of the client experience is going to just warrant more and more outsourcing of the investment management and other non-essential functions, even middle office and back office functions as well.
Well, tell me a little bit about the outsourcing of the middle office and back office functions. What's your experience with that?
Yeah, so you're seeing a lot of TAMPs or technology providers that essentially back up these TAMPs. You're seeing that there's kind of this evolution of them taking more and more of the burden off the advisor from a back office functionality. So things are becoming more integrated between the front, middle, and back office solutions. So you have now some TAMPs that have front end providers. So think financial planning technology even built into the TAMP, or integrations with third parties that are frictionless. You then have the middle office functions where you have all the trading, all of the billing, the performance reporting, the proposal generation built into the middle office. And then you have even the back office functions like account opening documents and actually the client onboarding experience into the custodian. You have that built in as well. And so you're seeing this integration, and I think that evolution will continue.
All right, so our goal was to keep this interview very basic for folks that are just exploring leveraging a TAMP, but let's go a little bit deeper on that. For the advisor who's sitting inside of a wirehouse today that is either just starting or recently started exploring the idea of going independent, what you just described are some pretty robust turnkey offerings. What does it look like? Where should they look? And who are thought leaders in that space so they could get more information?
Yeah, absolutely. So it's I think the Cerulli data you picked up, right? They do an annual kind of a TAMP survey, if you will, right? And you can look at that data. There's also other third parties that provide information on TAMPs like InvestNet. I think InvestNet does a fabulous job. It's probably the leader in the space. Vestmark, AssetMark, and then there's a lot of other organizations popping up like SmartLeaf that have a ton of data on that. And then obviously you can reach out to us at WealthShield. We're very familiar with the space, and we've partnered with multiple providers in the turnkey asset management platform area, and we're happy to be an open book and educate. But I think the first step is to gather as much information as possible, because this this evolution of this space is allowing advisors who move to independence to compete with larger firms, because you're able to outsource, again, those non-essential functions and focus on really growing your business where it counts.
So Clint, since I don't have a lot of experience in that process, could you walk me through the WealthShield process if I was an advisor looking to go independent and I wanted to use the WealthShield offering from soup to nuts? We decide, okay, WealthShield's the plan or the path for us, the provider. What does that process look like from planning, execution, and then a year after they're on board?
Yeah, it's a great question. So we typically start out with the advisor, and most of our advisors that come to us are through referral. And when we get to know an advisor, we really spend an extended period of time, typically between 6 to 12 weeks, really understanding every aspect of that advisor and their business, primarily with investment management being the center. And what we really want to understand is what's the philosophy, what's the process, what are your clients like, right? Are they more susceptible to emotional biases or logical biases? Are they mostly risk averse, mostly risk seeking? Is there a niche present in the book? But really getting this analytics and data behind who they serve and what they do well. Once we understand that, we go through a pretty comprehensive process of outlining or figuring out where the gaps are. And then we work in a collaborative environment with the advisor and their team to fill those gaps. Now, most of our relationships, when we slip over from this, which we call the strategy session, into the implementation or execution phase, we build out a roadmap, and then we work with that advisor a lot of times to even transition their book to independence or transition their current accounts to a new technology platform or to this new system, right? Once we've identified the gaps and built out kind of their new processes, we then work with them to implement at the account by account level. Once we implement the execution, it's pretty turnkey from there. We do all the ongoing management, allow them to outsource all their middle office functions. We partner very closely with Envestnet to make sure that's done properly, or whatever platform they happen to be on. And then we do all the ongoing due diligence and investment committee meetings and anything else that's required to continue to enhance the experience.
All right, so 6 to 12 weeks in the due diligence strategy phase. Implementation is probably predicated on a lot of factors. Is that fair?
That's right.
Okay.
Yeah, it takes sometimes up to 6 to 12 months, depending upon the complexity of the practice.
Okay, but then thinking longer term for the advisor that's listening to this, thinking about going down this path, once both of these phases are complete, their only function is to go out and serve their existing clients, plan with their clients, and look for new business. Is that fair?
Exactly right.
Yeah. So for the advisor who is talking to, say, who's sitting inside a wirehouse talking to another broker dealer, they may have some of those resources in-house, but really the onus is still on them for the investment management solutions, figuring out the technology stack. What firms like yours will do is help walk through that process, correct?
That's exactly right, and we customize it to the advisor and their beliefs and philosophy, which I think is what probably sets us apart. Is we go in with a clean slate, right? We have our own, predispositions or our own belief system and philosophy on markets and on how investments should be run. But at the end of the day, we believe the advisor is central to understanding what their clients actually need, and the goal is to help those clients reach their financial objectives, not mimic a benchmark. And so our goal is to really understand that intimately with the advisor, and we customize the TAMP, if you will, to suit the advisor and their individual client needs.
All right, let's shift the paradigm just a little bit. Say I'm an RIA that's just kind of grown over time, maybe a couple of acquisitions, and I'm at that $100 to $150 million mark, and I'm just overwhelmed. I have 3 service reps, maybe a couple of advisors under me. The operations is complete chaos because it's been hodgepodge put together over the past couple of decades. I'm sure you've run across this every day. Could you walk us through what it looks like as you help them clean that up and transition to the TAMP?
Yeah, so it's I always say it's always the worst at the beginning, right? But at the end of the day, we spend a lot of time with them working to clean up that messy garage, if you will, right? To just put order into the chaos, and it's really just done over that 6 to 12 week consulting phase. That's the key, because we help them understand exactly where every client is now, where they want those clients to go, and how we're going to take them there from an investment perspective and from a process orientation. And by doing that and putting the systems in place, again, all the work's on the front end. Once we build all that out, build all the systems, build all the portfolios, build all the rules into the system, it pretty much runs itself. But that front end work really is where the time is spent, and for good reason, because that's where it's all, that's where really the rubber meets the road, if you will.
So ballpark, what percentage of the clients that you go through the strategy phase with, and the client has expectations that they're still going to manage the money, or at least participate in the rule creation process, eventually realize that it's a little bit beyond their skill set or desire to even do, and just end up turning it over to your systems?
Yeah, I think the vast majority ended up turning it over, but it's because it's a collaborative system. So their fingerprints are very much on everything we co-create with them. And the way our contract reads is that unless we brought in the intellectual property, anything we co-develop is the work product, and that work product belongs to the advisor. And so I believe that's very important, and it's central to our overall vision, right, of where we think this industry is going. We want to empower the financial advisor, and we believe that their relationship with the client is central to the investment management process, and we don't believe in taking that control away from them. So they might turn over the day-to-day operations, but at the end of the day, their fingerprints are all over the rulemaking, the process, and the philosophy that we implement.
Okay, that's a very fair value proposition for sure. Let's talk a little bit without specifics, but in just general terms about the economics of using this type of provider.
Yeah, so the economics, most of the platforms charge basis points, and it depends on what type of platform you choose. So if you were going to do just a traditional advisor as PM, where the advisor is actually doing all the trading, you can get that for sometimes flat fees. That tends to be your lower cost option on the platform end. But if you're going to utilize, which is what we typically recommend, unified managed accounts, where you're offloading a lot of trading liability, you're able to use in a single account third-party money managers, funds and ETFs, individual stocks. You're able to combine all that into a comprehensive strategy at the account level, maybe include tax loss harvesting overlays and various other processes. That's going to run on some sort of basis point. And then when for our services, for just strictly oversight, it's really a la carte, but for just strictly oversight and consulting, we'll charge a flat fee. But if we're doing all the implementation and ongoing management, we usually bundle the platform cost with us into some basis point charge.
Okay. And then so net, somebody that is moving from a regional broker-dealer or a wirehouse, they're still going to come out ahead leveraging even the full suite from a provider like yourself. Is that correct?
Absolutely. Yeah, we built the business to be disruptive. And so just like even if you're at an independent broker-dealer, there's usually a platform or admin fee charged to just use the resources available to you. At a wirehouse, a lot of times it's baked into the grid. So you're getting a payout, and that payout is usually lower than at an independent place. And that lower payout reflects where all the admin fees are charged. Okay. So, yeah, they usually come out far better economically.
All right, then. So this is a novice question as it relates to TAMPs then. If I'm thinking of, or I already have rolled out, I'm sitting at an RIA, why wouldn't I just use a robo-advisor like Betterment?
Yeah, so that's a great question. I actually believe, my heart of hearts, that robo-advisors like Betterment are TAMPs. They're turnkey asset management platforms. They're called robo-advisors because they've automated the onboarding phase. But I think all TAMPs are going to eventually and are now automating the onboarding. And so I think why Betterment's had such success while other direct-to-consumer robos haven't is because they pivoted. They became a TAMP. And I think that's what you're going to see. Even, companies like Advisor Engine, who I think are awesome in this regard, they're becoming quite an impressive platform that really started on Robo DNA. And this is something they often say, which is we're a wealth management platform on Robo DNA. And I feel like that's the future of the TAMP business from a technology perspective. I know that InvestNet's working hard at automating, and I'm sure the others are as well, to automate that onboarding so it becomes a better experience for the client. And I think what you're really seeing that's cool is all the evolution of the FinApps, right? So the financial applications that are really personal in nature that the clients can access. And my hope is that more of these are used for real-time behavioral coaching and real-time behavioral planning and eventually data analytics that help us serve the client better at the end of the day.
Yeah, gosh, Clint, imagine all the analytics that are going to be available in a couple of years on behavioral actions of consumers.
Oh, I know. It's amazing. I mean, you can monitor when they log in and then regress that on did the market go down that day? Did that increase their login behavior? It's so cool. I mean, the future is really, really interesting.
Well, hey, if for the novice, are there any other types of TAMPs? Is there a delineation between the marketplace?
You know, there's all kinds of different TAMPs, right? And it usually, the way I look at them is who they typically serve. So there are certain TAMPs that are really built on the backbone of the insurance broker-dealer world. They were built to be truly turnkey asset management platforms where you outsource, and there's strictly model providing, where the models are built based on some sort of index, usually a risk-based index. And when you allocate to that TAMP, that money goes according to the risk tolerance you set for that client, and is managed in a way that's typically based on modern portfolio theory, and it's really non-customized. So you have those TAMPs. And I think what you're seeing now is TAMPs that are evolving to allow for that, what I call scalable customization. So the ability to customize through creation of sleeves and build portfolios that are suited to actual objectives and constraints of the end client. And so you have, that's really the only delineation I see now. And that separation does exist.
Okay. Well, Clint, this has been incredibly helpful. I found it personally insightful as I don't have a lot of experience there in the space. How could listeners find out more about you and your company, WealthShield?
Yeah, so the easiest way is to, you can follow me on Twitter. It's at Clint_Sorenson. And you can also check me out on our website, which is www.wealthshield.co. Follow me on LinkedIn as well.
Great. Clint, thanks so much for coming on.
Thank you, Jay. I appreciate it.